Shares of most, if not all, semiconductor stocks felt, or could I say crashed, on Thursday, and they were not the only ones. Most of the tech stocks have come down heavily on Thursday as well, other than maybe Meta, because Meta reported quite a good quarter, good commentary as well. So what exactly has happened? Well, let's first have a look at what's happening with our favorite semiconductor companies. As you can see at the time of making this video, ARM is down 15.7%, Qualcomm is down close to 9%, and remember, I covered both of these companies, both of their quarterly figures. The video is up in the top right corner. ARM, of course, was super expensive, was a good quarter, but the stock was just super expensive and guidance disappointed. So this is the reaction. Qualcomm, when I made the video, the stock was actually up 7%. It's now down close to 9%. Overall weakness of the market, plus some fears with regards to the phone segment of the business. So that's why now we're seeing this red, in my opinion, quite a good opportunity. We then have Micron down 7.3%, AMD down 6.11%, giving back all the gains from its earnings report a jump. The earnings report summary is also in the top right corner. ASML is down 5.3%, Nvidia down close to 5%, Intel, which will be reporting after the market close, we're going to cover that, down close to 4%, TSM down 4%, and SMCI down 3.79%. Actually, it's down quite a lot since we last covered it, so maybe I'll do a follow-up video on that, but you can clearly see there is some extreme weakness in the semiconductor industry, but you have to take into consideration that the overall market is red as well, so that does not help the cause. And so what's the main reason? We're going to touch on that right now, plus a quick recap of what has happened with Qualcomm, AMD, and ARM in case you missed yesterday's video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And after the market closes, we have a lot of earnings to go through. Amazon, Block, Mercado Libre, probably the three first videos that you can expect on the channel. So first things first, macro. So what happened? Well, weak economic data, manufacturing contracted, jobless claims rose, and construction spending fell, fueling recession fears. Fed hints at rate cut. This was on Wednesday. Powell suggested a possible September rate cut, but market sentiment turned cautious due to weak economic indicators. Meta's strong earnings initially boosted the market, but gains were trimmed as investors assessed the results. I believe Hershey's and Wayfair also reported, and they said that, well, there is some consumer weakness. Although I think a week or so ago we had American Express say the opposite, that the consumer is quite strong. So, okay, we'll see what happens. Focus on upcoming reports. Yes, the market is still anticipating strong results or expects strong results from the likes of Apple and Amazon. So jobless claims rose to 249,000, the highest level since August 2023, suggesting a cooling labor market. Manufacturing PMI fell to 46.8, indicating a deeper contraction in the manufacturing sector. And as you can see right here, under 50, that indicates a contraction. More recently, well, we have gone down previously. That was late 2022. We have gone down. Then it rose back up. And maybe right now we will be continuing to go down. And if we don't see any rate cuts anytime soon, although I'm pretty certain, let's say that we're going to get one in September, the question is it a 25 basis points one or a 51? As for mortgage rates, they dropped to the lowest level since February. They're now at 6.73%. Of course, all of that in anticipation of rate cuts. Just like before, it rose quite fast because of the anticipation of rate hikes. Now we will expect a drop in anticipation for rate cuts and actual rate cuts happening. Now you might say right now, okay, but shouldn't that be bullish for the stock market? Shouldn't rate cuts be bullish for the stock market? Because a couple of months ago, when we got these types of data, it was bullish for the market because that meant that Jerome Powell, the Fed, would cut rates sooner than expected. And that's the thing. Would have cut rate sooner than expected. Now, maybe the sentiment is more in the camp of, oh, maybe we're late. Maybe we are already in a recession, let's say, a mild one. So the economy is in trouble and rate cuts will happen no matter what. And so we're not getting the same impact, positive impact from bad numbers on the stock market. I think that's exactly what's happening right now. Again, yes, rate cuts are good for tech companies, stock markets, etc., and for the overall economy as well. But if you're late, then you might have hurt the economy a bit too much. But I don't want to go into the extremes right now because companies still reported quite good numbers. So I do think that the consumer is doing okay, not as good as before, but I don't think there is a doomsday scenario anytime soon. Now, with regards to the semiconductor stock specifically, since that is the topic of the video, let's compare a couple of companies right now, valuation-wise. So I've put here ARM, Nvidia, AMD, Intel, and Qualcomm. Now, bear in mind, Intel will report, like I said, after hours, and Nvidia towards the end of the month. So keep that in mind, because things can change when the report is released. Now, there was already a little bit of weakness in the semiconductor industry for the last couple of weeks. Most of those stocks have come down 20% or so, especially Nvidia was down 22-23%, which means that Nvidia stock was in a bear market. Yes, I know. Officially, that's the term, but let's be honest, Nvidia is still up 100% or so year to date. But right now, what do we get here? We've got a forward PE for ARM 75.8 times, Nvidia 37.1 times, AMD 30.3 times, Intel 23.3 times, Qualcomm 15.7 times. As for price to free cash flow, that's in the last 12 months. AMD, the most expensive one here, 159.9 times, ARM 151.8, Nvidia 68.1, and Qualcomm the lowest here, 14.6. Of course, no Intel as of now. And if we go and look at what is expected to happen, so if you look at a metric like price earnings to growth, it tells you a bit more about the future expectations. So here, ARM, the most expensive still, 2.6, Qualcomm 1.36, Nvidia 1.11, AMD 0.7, and Intel sits at 0.48. So quite cheap. And so like I promised, quick recap, shall I say, ARM, Qualcomm, and AMD. ARM, a good quarter overall, 2 misses here, one in royalty, a miss of around 3.9%. Free cash flow, well, there was no free cash flow, so quite a big miss on that. But the problem here, when you are so expensive, when you are a $140, $150 billion company, well, guidance has to be quite good. Again, it's the stock market's fault that they value this company so much. It's not this company's fault. So we've got a miss across the board for the upcoming quarter and for fiscal year 2025. They were expecting a raise that did not happen. So small misses here when it comes to guidance. As for Qualcomm, much better overall, beat across the board other than a small miss in handset 0.1% and in QTL 2.8%. But here, next quarter was pretty good, a beat across the board for their guidance. But again, they did touch a little bit on maybe some weakness in the phone segment, some headwinds from Huawei, even though they said that the Chinese OEMs grew 50% year over year or so. So in my opinion, for Qualcomm, it's quite an overreaction. And then the last one here is AMD. Again, strong quarter, small misses, 1.1% miss for gaming, 9 basis points miss for operating margin, and a 67% miss when it comes to free cash flow. As for guidance 3Q, beat for revenue, beat for gross profit, small miss when it comes to gross margin, a miss of 20 basis points. But with AMD, like I said in the recap video, at those prices, when you look at those numbers, again, great company, good management, but why not just stick with Nvidia? Nvidia stock retraced 20% or so, so why not stick with the winner that still has, well, I'm not seeing any signs of them slowing down. On the contrary, Zuck actually gave some good comments for Nvidia stockholders. I made a video about that as well. They're going to spend billions and billions more. They're going to need more compute to train Llama 4, way more than Llama 3. Expect them to spend even more in 2025. And of course, they're a huge client for Nvidia. So yeah, that's just my opinion. Of course, like I said, AMD, good company, but at those prices right now, currently, why not just stick with Nvidia? Now let's have a look at the graph real quick. So Nvidia, from its peak to its lowest point this week, it was down 26.4%. Now, to the current moment of filming this video, it's down 21.87%. It was overbought for quite a while. As you can see, you can stay overbought for a long period of time. Now, RSI is coming down. 200-day moving average sits at $86.4. Will we ever see it any closer to that? Remains to be seen. If we have a little bit of weakness in the next earnings report or guidance, then probably yes. If not, then we can forget about that. Looking at Intel, we're now back to levels not seen since, well, May of 2023. We were quite close back in April of 2024. But yeah, we're back under $30. But there can be a big move after hours on the downside or on the upside, depending on the quarter and on the forward-looking commentary. As for AMD, in the past couple of weeks, the stock is down close to 28%, also under the 200-day moving average, which still sits at $152. RSI neutral/low, so definitely there is a downtrend here when it comes to AMD. Maybe it can bottom here. It was a previous resistance point back in May of 2023, June 2023. So let's see if we can find some buyers. Currently, I don't think that will be the case. As for ARM, in the last couple of weeks, since it peaked closer to $190, the stock is down 36%. So RSI is getting in a more neutral area. We can see that the 200-day moving average sits closer to $106.7. Can we reach that and rebound around that area? That would be optimal, although you would still not get ARM for a cheap price, but of course, much cheaper than before. Great company, expensive stock. As for Qualcomm, since the peak back in mid-June, closer to $230, the stock fell close to 29%, also now under the 200-day moving average, which sits at $168.9. So definitely a downtrend here, RSI neutral / well, going down, but definitely nowhere near on the weekly, nowhere near being oversold just yet. And here previously we did see the stock rebound at around $157, $160. Can we see the same thing now? Again, it all depends on the market's momentum because the downtrend right now is quite real. So overall, that's about it. You've got macro pressure, you've got industry pressures as well, stocks being also sometimes overvalued, you've got earnings pressures, so all of that mixed together, you get a day like today. But don't forget, we also had big green days in the last couple of weeks, but overall, for semiconductors, there definitely has been some pressure. Don't forget, semiconductors started this year quite strong, so now the market is selling it off a little bit and maybe focusing in small caps, for example, or just cash. So that's about it for me in this video. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.